In the current scenario, with everything swaying up, what are your views there?
The last 1 year track record has been stupendous for both gold and silver. So, did you miss out on the rally? Yes, you did.
Right now, in the economic scenario where banks are suddenly buying, even countries, different countries are buying, so that also could be like a sign. You think that's a sign for you to kind of pick up on?
I think, these are two very large reasons. Institutional buying, demand supply mismatch, which is leading to some of these prices, rallying or are likely to continue to remain supported.
So, for a person who is just starting to invest, could you, in a very simplest form, make them understand what is gold and silver FOF and how can they kind of enter the market?
So, what is FOF in the first place? It is a fund. It operates on a daily NAV, just like you would be familiar with any other mutual fund investments that you may have in your portfolio.
Does mutual fund companies actually buy physical gold while someone invests in them?
Mutual fund companies are supposed to have physical gold for every unit of gold ETFs that we issue or gold FOFs that we issue.
Investors, retail investors, they always feel that, will this be like a secure investment?
So basically, our regulator, SEBI, has an oversight on, has laid out rules and ensures that we follow those rules.
Should I look at investing in either one, or should I look at getting into both of these assets right now in the current scenario?
Every investment has to serve a certain purpose, right? And so, what is the purpose that gold serves? What is the purpose that silver serves? So, what is gold? He says it's a brainless asset. It's a remonetization of gold, if you're able to understand that.
Now, I want to be a part of this. I know that I want to definitely go for gold. Silver also should be a part of my portfolio with the industry. What should be the percentage?
A very recency bias in me will say, yes, you need to have similar amounts of gold and silver in your portfolio. Gold is a great deflationary hedge. Gold, obviously, we all know, is a great inflation hedge.
Do you think this is like a precious metal super cycle, or this is like a bubble that might just burst?
Near-term rise in prices seems to suggest that be a little more careful while adding these to your portfolio.
Should I wait and then put 50,000 rupees in one go? What should I be doing?
And I told you that, have you missed the rally? Yes, you have. But you've just missed probably a part of the rally.
Hello and welcome to yet another episode of Axis Mutual Funds podcast series. Today we have Vandana Trivedi with us. Vandana has been a veteran in the mutual fund industry with over 25 years of experience in financial sector. Welcome, Vandana.
Thanks, Khushbu. Thanks for having me.
So Vandana, by the way, is also a mountaineer and she's a fitness enthusiast. Vandana, would you like to add to that a little bit?
Yes, I would think that I'm a fitness enthusiast, and mountaineering is just one way of keeping fit. Because when I hold an ambition to climb a mountain in a certain year, then I know that every morning I'm waking up, I'm going for my run, I'm going to the gym, just because I want to climb up the summit. So to that extent, it does help me in my fitness journey quite a lot. And I think climbing mountains is a calling. So it's just lovely to be up there.
So actually this brings a thought to my mind about discipline, right? Like how discipline and mountaineering, like a hobby plus the fitness journey, everything, which kind of goes very well with investments, right? Like historically what we've seen in terms of customers, they generally come into the market when the markets are like very, very high, and they exit the market when the markets are at the lowest point, right? Which is such a opposite behavior than what actually should happen.
Be doing.
Absolutely.
Yeah.
So your thoughts there in terms of precious metals, like what do you think in the current scenario with everything swaying up? What are your views there?
So you want to know my views in terms of whether we should invest, not invest, or
what should I do in the current scenario?
What should an investor do in the current scenario? Okay, so what are the precious metals that today are available for investment in a very simple way, say through mutual funds? They are basically gold and silver, right?
Yes.
The last 1 year track record has been stupendous for both gold and silver. So did you miss out on the rally? Yes, you did. Okay. But is there more to be had? Certainly, yes. There is more to be had. So if you've not invested, yes, you should. You should start investments in these spaces. But investments not because you're chasing the rally that has already happened, but because they need to form a part of your investment portfolio and they have a place in your investment portfolio. There are reasons where they stand out. There are certain market conditions where they stand out. There are certain economic conditions where they stand out. For both of these reasons, they should be a part of the portfolio. And therefore, if you don't have them, you should have them. If you already have them and you think that they've rallied up significantly, then there are a number of reasons why we have reasons to believe that this rally still has legs. Therefore, the recommendation would be to, yes, build on.
Absolutely. And what we've also seen is right now in the economic scenario where banks are suddenly buying. Even different countries are buying. So that also could be like a sign. You think that's a sign for you to kind of pick up on, or?
Yeah. So, you're absolutely right, Khushbu. So, this leg of the rally, has been supported or has been initiated to a large extent by central bank buying. So, essentially, if you were to look at some important reasons why this rally is happening, one has been institutional buying, right? A lot of central banks have started buying gold. You take banks like Russia, India, China, to some extent, Japan, to some extent, smaller countries like even Vietnam. All of these central banks have started buying gold. So, and there are reasons for it. I mean, there was the Russia-Ukraine war, and suddenly countries saw Russia's US dollar assets getting frozen, by virtue of sanctions, etc. So countries actually took a step back. Governments took a step back to think about the status of their US assets, US dollar assets. And, there could be a point when, geopolitical events dictate or there have been sanctions that have on them, or geopolitical events lead to a situation where their US dollar assets get frozen. And probably that led to this, spate of gold buying by various central banks. So clearly institutional buying is one. Retail buying has always been there, especially in a country like India.
Yeah.
If you notice, retail buying in gold has always been there. The institutional buying is a new one, right? I'll also connect this to why I think there is more leg to the rally. But before that, what is the second most important reason why we think that this rally will continue, or why gold prices are continuing to go up, and also silver prices, right? If there is one thing that economics has ever taught you from school, which still holds relevance, it's the demand-supply equation, right? So in both of these precious metals, supply is pretty much constant, whereas demand is going up. And that also leads to a situation where prices will remain supported. And I spoke to you about central bank buying, right? Another reason why I think there will be this rally is likely to continue. When a central banker buys, they are what we call as a non-disruptive buyer. What this means is that they know they come with volumes in terms of what they want to buy. At the same time, they have a plan to buy, and they don't want to jack up prices. So they are buying smaller quantities relative to where they want to be across time periods. So what this does is this lends an automatic support to the market in a way, right? So that is the support, that a floor, if you may, that you're getting, right? But obviously they want to build their gold books, and therefore you will see that you are getting into a market which considering the frenzy seen, not be surprised if there is a kind of a time correction, but there's pretty much a floor which will continue to be given the overall uncertainties that we live in. So I think, yeah, these are two very large reasons. Institutional buying, demand supply mismatch, which is leading to some of these prices, rallying or are likely to continue to remain supported.
Yeah, I think very, very well explained, because, before we get into precious metals, we want to know the current scenario and how it's kind of panning out. Great. So let's dive into what we have on our plate today. So for a person who is just starting to invest, could you, in a very simplest form, make them understand what is gold and silver FOF and how can they kind of enter the market?
Sure. Okay. All right. So what is FOF in the first place? Okay, we'll begin there. FOF is nothing but fund of funds, right? Which is nothing but, for a lay investor, just a mutual fund. There is nothing else to FOF. You will see FOF everywhere. But do not worry about the construct. It is a fund. It operates on a daily NAV, just like you would be familiar with any other mutual fund investments that you may have in your portfolio. Now, why is it called a fund of fund? Because we are investing in what are called as ETFs, exchange traded funds. So when I invest in a gold FOF, I'm actually investing in a mutual fund at NAV price, not at market price on a daily basis or an hourly basis, at NAV, but that in turn invests in an ETF which is traded in the market, and the benchmark is the gold or silver prices on a real-time basis. So the underlying is the gold price, physical gold price, and the physical silver price, which means that you're investing pretty much in, say, physical gold in terms of prices, in terms of the price you're paying, but you're not actually having physical gold. You're using the financial route to buy that asset, which is the fund of fund route. So in a mutual fund, just like to have an equity exposure, you would look at investing in, say, an index fund. Similarly, to have gold or silver in your portfolio, you can buy a gold FOF or a silver FOF from AMCs that offer that.
Okay. So you mentioned that I will be buying funds and it'll actually be, I had a question. Would you actually does mutual fund companies actually buy physical gold while someone invests in them?
So mutual fund companies are supposed to have physical gold for every unit of gold ETFs that we issue or gold FOFs that we issue, right? So supposing you've invested 10,000 rupees in my gold FOF, I need to have 10,000 rupees of physical gold. Where do I keep that gold? Do I have a locker here in this office to keep the gold? No. This is very, very well regulated by the regulator SEBI, who mandates a few things. Number one, for every rupee of units that I have issued, there has to be commensurate gold or silver depending on the fund that you've invested into. Number two, that gold or silver should be secured in a secure vault under the oversight of what we call as a custodian. A custodian is a third party who is not related either to the AMC or to the investor. A custodian is more like a cop who is keeping watch over the gold assets that the AMC has bought to account for the units that have got created, right? Not just that, there is a regular audit that is mandated of the quantity of gold. And another thing that I wanted to point out here is that each bar that is held is uniquely numbered, and there is a clear kind of a record keeping of these precious metals. So there is a clear, this is not a paper asset. This is backed by real physical gold. So if you want to buy gold, if you want to buy silver, the traditional routes are to walk into a jeweler's shop and buy either ornaments or bars or coins or whatever. In this route, you need not leave your desk. You just click a few clicks on your mouse and you buy gold, you buy silver. You do not have to worry about storing them. You do not have to worry about paying locker rents or insuring them. Insurance is also, by the way, mandated by the regulator. So all of that is so securing the asset, auditing whether the right amount of gold is present or not. More importantly, purity of the asset in terms of the purity of gold that we can store or for every unit that we issue. And lastly, insurance. All of them are overseen by the regulator. So I think that it's the most trustworthy, simple to use, and worry-free way of owning precious metals.
Yeah, and there is this thing for investors, retail investors. They always feel that will this be like a secure investment? I think that kind of answers your fear that this is absolutely secured and the government is has enough rules and regulations around having this for mutual fund companies around having this secured. So don't worry about that.
So basically our regulator, SEBI, has an oversight has laid out rules and ensures that we follow those rules.
Yeah. Great. So now I have decided, okay, I want to, look into precious metals. I want to start investing in either gold or silver. Should I look at investing in either one, or should I look at getting into both of these assets right now in the current scenario?
The way I like to answer this question really is, what are the use cases of both of these? I mean, see, every investment has to serve a certain purpose, right? And so what is the purpose that gold serves? What is the purpose that silver serves? And under what circumstances gold would do well, under what circumstances silver would do well, etc. Is that okay with you?
Yeah, of course.
Walk you through that. So, obviously, first things first, we're all talking about gold and silver now because they've returned whatever they've returned, 50% last 1 year return, etc. But gold and silver do hold a place, or precious metals do hold a place in every investor's portfolio, right? So what is gold? Ideally, if you were to believe what Charlie Munger likes to say about gold, he says that it's like I'm paraphrasing him. He says it's a brainless asset. It's completely non-productive. It just does nothing to the growth of the economy, right? When you're funding a company, you're basically funding growth in a way, right?
Yeah.
So gold is a non-productive asset that way. However, it serves a number of useful purposes, which is that if the world is breaking around you, you just have a lot of gold to run away with, and it has a reasonable money value, right? Come to think about it, this money value was not recognized for a long period. Suddenly now the money value of gold is getting recognized, right? That's why you're seeing gold prices go up. In investing parlance, you could say it's a remonetization of gold, if you're able to understand that. Essentially, you're able to attribute the right money value to gold, which otherwise was just flat for the longest period of time, right? So gold works when other markets around you seem to be failing. So you could have equity markets getting volatile. You could have interest rates falling. All of these periods, gold usually does well. You could have trade wars announced. You could have real wars announced. All of this time, gold seems to be like a safe haven. It's also called a safe haven asset, therefore, right? Now, what about silver, though? See, silver usually probably or definitely has a productive use also, which is in its industrial use, right? And therefore, you could say that if AI is indeed as big a force as the world today is making out to be, and I hope it is, because trillions of dollars are getting invested into AI, and all of us will lose money if that doesn't work. But if AI were to become as big as we think it will, if renewable energy is going to become as big as we are driving it to be, if electric vehicles become as big as we think they will, if semiconductors are really huge and going to be at the core of government's priority list, then all of these industries do need huge amounts of silver, right? So silver has a productive use to it. Now, what's the flip side of it? If there were to be a sudden drop in growth, or any of these heavyweight industries were to bomb, then you'll probably see it impacting silver prices as well. So to answer your question, as a lay investor, do you really want to go through these hoops of understanding when gold will do well? Is it related to interest rates in this way, or is it related to equity markets in that way? Or, if geopolitical tensions may lead to gold doing well or silver doing well. All of that is secondary if you want to really try and benefit from the, rally that you're seeing. For a start, they should form a part of a customer's portfolio as a part of the core portfolio. Obviously, the more real life uses of some of these metals is, you remember I told you that they are pegged to the prices of physical assets, so physical gold and physical silver. And clearly, we do have use for gold. There is ornamental use for gold. And therefore, if you have a use for gold a few years down the line and you'd rather want to start putting in money today because you do not know what kind of gold ornamental styles will be in vogue at that point in time, etc. This is a great way to do it, right? And buy those assets via the FOF route and then go out and redeem that fund. You get a chunk of money, which is again related to the value of physical gold or silver at that point in time when you redeem, and then just go out to a shop and buy that gold. So it just serves a simple and practical a use case as that. And at the cost of repetition, when you're holding that investment, you're not worrying about someone breaking into your house. You're not worrying about locker rents. You're not fighting with your branch manager to give you a larger locker. You're not trying to, manage to fit in a lot of silver diyas in one little locker. So all of those added advantages are there.
So for me, it's a hassle-free investment. You don't have to think about anything in terms of security, deposits, anything. It just makes absolute sense. So, okay, now I want to be a part of this. I know that I want to definitely go for gold. Silver also should be a part of my portfolio with the industries. What should be the percentage? Like what in terms of portfolio allocation is something that I would want to kind of have?
It's not an easy question to answer, only because I think individual needs differ, right? And like I told you, there may be some amount of view taking that may come into way in terms of where is growth headed, etc. When you want to look at silver as an investment option. But the other way to look at it is that silver always plays catch up to gold. I mean, that's been the historic trend. And therefore, if you think that gold has really, rallied so much, you would also probably expect silver to catch up. And silver has more than caught up, especially this month, right? So a very recency bias in me will say, yes, you need to have, similar amounts of gold and silver in your portfolio. But I think that, look at it as one bundle, look at it as precious metals in my portfolio, and, drop the use case that you would have in future, maybe for gold. Gold does not only hedge inflation. Gold is usually seen as an asset that will certainly cover your inflation, right? Let me just take you back a bit in history. You've heard of the Great Depression in the America, right? I think it lasted between 1929 and 1932. So it lasted almost 3 full years. And it was a deflationary environment. So there was no inflation. There was the opposite of inflation. There was depression. Gold was the best performing asset. It returned about, if I remember the number, at about 75% return during that period. So, gold is a great deflationary hedge. Gold, obviously, we all know, is a great inflation hedge. Gold has also proven itself as a great hedge when it comes to various situations which may not be very conducive to say a very straight-faced equity market investing. So gold is not just an inflation hedge. That's a very, it would be a very narrow view to have on gold. Gold hedges all kinds of, many kinds of abnormalities in the market, be it inflation, be it deflation, be it falling equity markets, be it volatile political environment, being falling interest rates. Gold has this innate, behavior of filling in as a cushion across various types of markets. So clearly gold kind of fulfills that place. The silver, for reasons that I told you, it's usually plays catch up to gold, so great metal to have in your portfolio. It has always had industrial uses. So, of course, we're talking about it a lot right now, but it so appears that the industrial uses that it has right now is also the center priority of the world at large, right? Across all the new age industries that you see. So it maybe makes a case to actually pencil in a fundamental, up move in silver as well. And therefore, both of them would be good to have in portfolios. Stomach some more volatility in silver maybe, because, the demand for silver could end up being a lot more commensurate to the supply of silver. Gold may be a little more saner. But with central bank buying, you probably can't say that about gold as well. So do stomach some volatility along the way, but great investment options over the medium to long term.
Great. And, we've seen like a rally in terms of gold has been like the maximum, like almost all-time high. Gold has been the all-time high.
Yes.
Silver, as we said, that it's again
Near
rallied.
to its all-time high.
Near to its all-time high. Do you think this is like a precious metal super cycle, or this is like a bubble that might just burst? What do you think?
One is always smart only in hindsight, not in foresight. So I shall not go down that path. But, near-term rise in prices seems to suggest that be a little more careful while adding these to your portfolio, because there has been, and like you said, gold at all-time highs, silver at near to all-time highs, and all of it. But there is enough evidence in history to show that at all points of global uncertainty, domestic uncertainties or volatilities, and I told you about the Great Depression period. Similar is true when the USA went through its huge hyperinflation period in the 70s. And again, then for that entire decade between 70 and 80, gold was the best performing asset, right? You take more recent, closer to home examples, right? You take the yuan depreciation led volatility in the markets in 2015, or you look at the COVID period. Again, gold was such a better performer compared to the other more popular investment avenue, like say equities. So clearly, use it as an asset that is a hedge to your overall, say, other portfolios, like say an equity portfolio. However, be also mindful that you're really seeing price levels which have hitherto been unseen or have been seen, say, 3 decades back, right? Or a decade back in the case of silver. So you want to be a little more careful about the kind of investments that you make. Do you want to really, do it all at one go, or you want to kind of nimble your way through your allocation? A lot will depend on one's ability to kind of digest risk, intermittent volatility, etc. So that will call for a lot more individual-led assessment rather than just one formula.
Got it. So today I have, say, close to 2,000 rupees every month. Should I look at a month-on-month investments in, these metals, or should I wait for, the markets to, because it's on the topmost level right now? Should I wait and then put 50,000 rupees in one go? What should I be doing?
So, like when we began this conversation, I told you that have you missed the rally? Yes, you have. But you just missed probably a part of the rally, right? Also bear in mind, if you know compounding, which we all do in this industry, from $1,000 to $2,000 or rupees, it's a 50% or 100% jump, right? From a 2,000 to a 4,000 rupees, again, it's a kind of a 100% jump. 4 to 6,000, it's not 100% jump, right? So what I'm trying to say is that in your head as an investor, we are all, and that's what investors do. They are looking for constant jumps in the value of these assets, but the percentage of jump at every incremental jump is lesser. So it's easier for the markets, and this holds true for any asset class. So it's easier for the markets to rise from a certain higher level than for the same amount than what it was when it was at a lower level. So that kind of an anchoring bias also leads to competition and and comfort in wanting to procure the asset class, and therefore you'll see more flows coming in. So the other big investment wisdom is that in the short term, flows wins, fundamentals do not, right? Fundamentals could go really bad, but if there are flows to support the market, then market only keeps going up. It's only in the medium to long term that actually fundamentals kind of kick in, right? So the flows are in favor of these assets. So, do not wait. If you already have a set periodic frequency set aside for investments into these metals, do a kind of an SIP if you can in any of these funds.
So basically, while the current market scenario, you all have missed the rally, but there's a lot more. Could be. We don't know.
This rally far.
So far, exactly. I think in terms of silver, we have kind of touched upon it, but one thing that comes in my mind, like EV, semiconductor, energy, the future that like the Gen Zs today are going to live all of that the way if it's going. You think silver is future proof for them, or this could be like a situation only today? What do you think?
Silver is future proof from its relevance in their investment portfolios.
Yeah, for Gen Zs mainly.
Yeah, I understand. I think I understand your question. So, like we've been trying to build this case that, listen, precious metals should form a part of your portfolio. And so far, gold assumed or cornered a lot of the conversation around precious metals in portfolios. I have a feeling that as regulations become a lot more wider and as people understand markets a lot better, you'll actually find probably Gen Zs, investing into copper and investing into a lot of other metals as well. Copper is going through a rally also because some mine in Indonesia has just shut. But anyway, that's for another story, I guess. But, to answer your question, if the industrial use case of silver has a long ramp, right? Then this may be, this may actually qualify for an equal allocation along with gold for young investors.
Basically, today's silver can be maybe tomorrow's gold.
Yeah, maybe, yes. Yeah.
Because it makes sense, right? Because we are going to live like today, maybe not today, tomorrow we're going to drive electric cars, we're going to maybe be on our phones all the time that have these silver chips, etc. So great. I think we've had a great conversations. I have like a few quick rapid fire rounds for you.
Yeah.
Few questions.
My most favorite part, I can assure you. But yeah, let's start.
Okay. So, and this could be a little repetitive, but this will help the audience who is watching it to kind of get quick answers to what we're looking at. So, if I had 10,000 today, what should I pick? Gold or silver? Both. So, guys, both, it's a perfect time for you. Next question. If market crashes tomorrow, which one out of the two will protect me?
Gold is what theory suggests. I would think maybe silver too, given the current context. But theory says gold.
Okay. So, again, kind of two, but theory, if you look at long time, like if you look at
1930s,
say gold has been like your kind of even before. So centuries say gold has been there. So maybe gold, but in the current scenario, even we can't forget silver. So will allocation in each of these, commodities will differ? Like if I'm a 25-year-old, will it differ to a 45-year-old?
Okay. So yes and no. Okay, age is definitely an ingredient to determine your allocation, but I also think that sometimes age does not matter and only your risk appetite matters. So, for example, I could be a 25-year-old earning, therefore I have a long investment journey until until at least 50 years of age, right? Which would lead you to believe that, yeah, I have the stomach to take a lot of risk in my portfolio, right? I can really add risk to the portfolio because I have like a 2-decade kind of a time frame. However, at the same time, my monthly reality could be I have a monthly salary of 1 lakh rupees, but 80,000 rupees is already committed to various commitments, rent, EMI, grocery, etc., right? Now, which means that for the rest of the month, I'm going to live on 20% of my earnings. So therefore, my risk appetite could just come down significantly. Whereas at the same time, I could be a 45-year-old who has who's doing well at work or whatever I'm doing, and I have a reasonably large disposable income. Kids are already in college, so those commitments are behind me, and I still probably have a 10-year ramp to plan for retirement, etc. Which means that my risk appetite as a 45-year-old in this example is far higher in the 25-year-old's example that I just gave you, right? Just theory suggests that a 25-year-old can take more risk, therefore can go in for more volatility, and therefore can add a lot of silver because it's a little more volatile than gold. But you have to look at the context, which is individual to each of us, and then decide on the allocation. I think that's what the response to your question would be.
So more than age, it's about the appetite in terms of
which is in turn determined by the context that you're going through in life at that point in time.
I think very well said. Today, like for me at least, like if you see, our parents would have kept silver, and what they've told me is like later when we are not around, first thing you utilize is silver for your consumption whenever you need, and then you go to gold.
Even if you have to dispose of some of these important precious metals from your house, the first thing that you reach out for is that these silver diyas are kept, and they've been around for long. Let's just go and give it away and exchange it. You never have those thoughts about gold. Right? You kind of keep hoarding it. So
absolutely.
Practical usage, I think efficiency is better in silver.
So we've seen in the current context, silver has been used in semiconductors, EVs, etc. So all of this is something that we are using. So for young investors and people who want to start investing, what is your take in this context?
Oh, clearly, I think that silver definitely holds a very, very important part in their portfolios from a future relevant standpoint. It's only now that there is so much conversation, not just conversation, also capital going into new age industries like, say, the semiconductor industry, the huge amount of chip making that has become the center stage of all governments. The kind of EVs that are getting promoted in terms of usage, all of it in one form or the other needs silver. So silver always had industrial usage. However, it's just picked up its pace in all the new age industries that have now begun to be seen as being very, very important for how the future world will look like. So from that context, I would probably like to suggest here that silver is just beginning its journey of relevance in terms of productive use. And therefore, if as an investor, you participate in silver as an asset class, you can only imagine the kind of huge runway ahead of you that you have by using silver as a prudent investment part of your portfolio.
But adding to this, while, this is great opportunity, volatility is something that we've seen quite a bit. So throw some light there.
Yes. So, volatility is actually, a mainstay of any kind of an asset class. I mean, clearly there is no doubt about it, right? Time heals everything. Time heals volatility as well. Silver, compared relative to gold, silver may be seen as probably a more volatile asset. But, if you have the risk appetite to go past that volatility on an everyday basis, whenever there is volatility, then silver is the one for you. If you're an investor who thinks that, listen, I can't afford that volatility because I may be having a very lesser investment horizon, or I can't afford that volatility because volatility just gives me the jitters, I can't sleep well at night, then an investment option like silver may not be the one for you.
So, if I want to start investing today, what should I look at in terms of starting off? What should be the money that should I put in gold?
Oh, you can, any money is okay. Honestly, if you've not invested, please start off. Whatever you can afford, do. We had discussed that, listen, you've already missed a part of the rally. So you yourself have a lot of catching up to do. So invest any money. You may choose to invest money in a set periodic frequency. It could be monthly, it could be weekly. I can tell you that, in fact, we offer even a 10 rupee SIP kind of investment. So at one shot, you can invest, even with just 10 rupees of investment, you can buy units into the Access Gold Fund. So any money is good money.
Vandana, can you help me summarize why should I be investing in silver mutual funds in the current market scenario?
Yes, the first important reason is that you need to have silver as part of your portfolio. Why do you need to have silver as part of the portfolio? There are very few precious metals that are available to you to buy easy, as in through the financial route. Under the mutual fund umbrella, you're getting gold, you're getting silver, just two of them. So go ahead and buy both, right? The second big reason in favor of silver is that it has productive use. By productive use, what we mean is that it has a very critical and crucial industrial use. If you think that, EVs are going to get only bigger, that semiconductors are such an important, or going to be such an important part of our lives, that, GCCs are the way to be. That's how large corporations are going to conduct, how they go about going their data businesses, etc. Then in each of these new age businesses, which are finding a lot of capital and government trust, silver is being used, which means that they're not just unproductive assets that are just doing very well, but there is a backup use to all of those assets. And from that context, clearly silver is a great place to be in. It's a great place to stay invested. If you needed proof for silver actually doing well, the recent past has suggested that to you. But considering the future roadmap, it does look like silver has a very long and important place ahead for investors' portfolios. So I think these are a few of the reasons why silver should form a very, very integral part of customers' portfolios.
So I've decided that I want to put in money in either gold or silver or both. So what is the amount that I should start with? What would you suggest?
The answer would be the same, that, it again depends on a certain individual, their life stage, their risk appetite, whether they already have these, metals in their portfolio or not. And therefore, they determine their allocation, as we call it, right? They determine how much money they should invest in these investment options. And again, depending on your disposable income left after expenses, that would qualify for investments, and then you decide what you want to do. If you were to ask me what is the least you can do, we have an option in the Access Gold Fund where you can do a daily SIP with just 10 rupees, which means that you just get 10 rupees debited from your bank account to buy gold. So that's what the 10 rupees daily SIP does for you. Imagine buying gold for 10 rupees on any given day. No, you can't imagine, but with Access Gold Fund daily SIP, you can actually do that.
Great. So we've made it so accessible in terms of getting gold, right? Like otherwise, before buying gold, we'll always think, do we have that kind of money left, etc. So I think we've had a great conversation. Thank you so much, Vandana. You've really thrown a lot of light onto this topic, and I hope you guys kind of learn a lot out of it. Thank you so much.
Thanks, Khushbu.
Thank you.
Thanks.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.